All right, thanks everyone for joining us in today's webinar. Today we're going through some of the implications of running a cryptocurrency business. We have included businesses that may simply receive crypto as payment for goods and services that the business offers, to businesses that its core activities are revolved around crypto. These include NFT businesses, trading and mining businesses, exchanges, and more. So just a quick disclaimer before getting into it. The content of today's presentation is general in nature and may not relate to your specific situation. Therefore, we advise to seek out specific tax or legal advice as it pertains to your affairs. If you would like to contact us regarding your situation and discuss in further detail, kindly reach out to us via our contact details, which we'll present at the end of today's presentation, or simply schedule an appointment via our website. Also note that the content of today's presentation is based on the current guidance from the ATO and legislation, which is subject to change. It is also important to note that cryptocurrency is constantly evolving, and so is the laws governing this space. In particular, the tax treatment on various cryptocurrency related transactions. Excuse the enormous picture of myself there, but how's it going? Just a bit about us. We're a chartered accounting firm that specializes in crypto. We provide a wide range of services, including compliance, advisory, bookkeeping, and more for the crypto community. Fullstack Advisory also assists other businesses, particularly in the startup and tech space, where we offer the same services, and we also offer VCFO and R&D services. Fullstack works with all various folks from crypto, including just regular investors to hardcore investors and traders. We work with miners, we work with gaming enthusiasts, crypto businesses, DAOs, and also exchanges. Our focus is providing practical services and advice to our clients. And our approach is hands-on, and we work closely with clients in assisting them through various tax matters impacting their affairs and ensure they remain compliant. So just some housekeeping rules. So note that everyone's come in muted. Also, today's session will be recorded and uploaded to YouTube. So if you can't make the whole webinar, feel free to refer to the video when it's published. Also, we'll have a Q&A session at the end of today's presentation, so feel free to leave any questions along the way in the comment section or the Q&A section, and I may get to it on the spot or at the end. We'll see how it goes. So today's agenda, we're going to be looking at an overview of crypto businesses, compliance software, record keeping, receiving and making payment in crypto, goods and services tax, capital gains tax, trading stock, and the Q&A at the end. So just a bit of an overview. Cryptocurrency and commerce is becoming more mainstream as businesses incorporate crypto into areas such as investments, operational matters, and to aid in processing transactions. Some businesses may want to appeal to a larger audience by accepting payment in Bitcoin or other popular cryptocurrencies. And this is a great way to potentially generate more sales, as some of your customers or clientele having crypto positions may not want to sell out of those positions to fiat and instead pay it directly from their portfolio. However, it is important to seek advice on the commercial and tax implications of receiving payment in crypto, including how the cryptocurrency is going to be stored, receiving or sending crypto, and how you will keep records of these transactions. Also identifying whether there is GST implications on the transaction and bringing these transactions to account in your accounting software. While there is additional compliance requirements in using crypto in your business, a lot of this can be automated through recognized compliance and crypto software, but it is important to regularly review and check the data for completeness and accuracy where these softwares are being used. When running a business, it is important to consider a plan or strategy that addresses the compliance requirements of the business's activities. This may include mapping out services where, for example, there are many, and identifying relevant GST implications for lodgement of your BAS, understanding and adhering to relevant record-keeping procedures and requirements, especially where cryptocurrency is featured within the business in whatever capacity. It is also relevant to consider how you may reduce compliance costs and burdens by staying on top of your business's financial accounts, and ensure to query or raise any areas of concern with your bookkeeper or accountant. So setting up your business's compliance software is one of the first steps really in commencing the business's activities. This will ensure that the business is able to bring to account all fiat and crypto transactions, set up payroll for employees, set up customer and supplier profiles for accounts, and more. Choosing the right software that is suitable for your business needs can save time, reduce compliance burdens, saving compliance costs, and reduce the allocation of resources. There are many options available, and choosing the right software really just depends on the needs of the business and your personal preference. Considering an accounting software solution which you are comfortable using yourself is very important. This will provide you with the benefit of having the business's financial data available at your fingertips. Most compliance software these days, you can have access on your phone. There's app support, or if you prefer to use an actual computer, there's various different ways nowadays of actually accessing your current and live data. Also consider if you're a sole owner and preparing your own invoices on a regular basis, using a software package that you are happy with will make this obviously a smoother process. Most accounting software solutions have built-in payroll functions, so consider whether the entire package is the right fit for you. Some products might have something that you really like and others that you don't like, so exploring the right one and having a happy medium and balance there is important. So depending on the business's needs as well, you may consider external payroll software solutions. Like if your payroll is quite high, like if you have a lot of people on payroll, then one software or product inbuilt feature might not be adequate for the business's affairs. And there are other options available in the market which might be more suitable. We love using Xero. I think most accountants love using Xero, and business owners love using Xero. It's user-friendly. It has extensive reporting functionality that makes good use of your data in presenting it in meaningful ways. The software is also suitable for most tax agents and accounting professionals who will likely appreciate the choice if you were to use Xero, because it does all the complex stuff which allows us to prepare financial statements and the likes thereof. If your business transacts with cryptocurrency, then it is necessary to consider how these transactions will be brought to account. It is common practice for business bank accounts to be linked with live bank feeds to your accounting software, which allows for the data to be allocated to the financial accounts. This will also include deposits, withdrawals from centralized exchanges, where you go from fiat to crypto and crypto to fiat. However, the void there is the transactions occurring on the blockchain and making sure that these are brought to account. So recognizing the need for accounting for your business blockchain transactions, it is necessary to consider a crypto compliance software. Some options available for this are coin tracking, Coinly, crypto tax calculator, and there are more. While these software options are great, it's important to remember that your crypto affairs will likely require expertise in ensuring that the correct crypto tax treatment is applied, and it also gets accounted for correctly in your accounting software. There are also many add-ons available for most accounting compliance software products. And these may aid in automating key functions. So it's important to have a chat with your accountant or tax agent in determining what options are available and whether or not any of these may suit your needs. We do receive a lot of feedback from our clients using crypto compliance software. Whilst not all of them are, it's not a lot of the feedback is great. It's really important to note that if your affairs are complex, we highly recommend seeking aid from a professional who understands crypto tax implications, as well as using the software to ensure that there's no misreporting of your crypto affairs, and also with the information that's being brought into your accounting software. Okay, so record keeping, it's a necessary evil. We mention this all the time, but that's because of how important it is. We are seeing a lot of our clients getting this right now. However, it's still something which I think is majority of the time it's missed. But with the right compliance software being used, this process can eliminate a lot of the business's administration, leaving you to focus on the operation of the business itself. So understanding the record keeping requirements is very important. And the record keeping requirements are imposed by the ATO, and they cover mainly when you buy, sell, transfer, including dates of the transactions, the amount of the value of crypto being transacted in Australian dollars, and recognizing every single one of these instances. So having an appropriate software there will help eliminate a lot of that administration work and bookkeeping work. Another note as well, so if you are a business that you allow customers to pay for your goods or services using crypto, you may want to opt into using a payment service provider which accepts crypto as payment and converts it to fiat currency. So your customer pays in crypto, you receive the fiat. So this obviously has the benefit of eliminating the additional compliance requirements of transacting and holding crypto. So consider with your accounting professional whether this is something that will suit the needs of your business. Many other business owners as well prefer to use to do their own bank and blockchain reconciliations. Now, this is a fantastic idea. It's the finger on the pulse sort of method, which gives you full control and visibility over the cash flow position of the business and how well it's traveling. So this can aid in identifying cash flow concerns on a real-time basis and allow for any proactive measures to be taken if necessary. However, some other business owners may prefer just to appoint a bookkeeping or accounting professional to take care of the record-keeping aspects of the business. Both of these options are great. It really just depends on your personal preference. However, ensure that both fiat currency transactions and blockchain transactions are being actioned in this process. It is important to be aware of these record-keeping obligations when working with crypto, that the additional red tape imposed by the ATO can be quite excessive, but with the right software solutions, we can really try to automate that process as much as possible and create some efficiencies. Another recommendation that we highly make is ensuring that the actual data is being regularly extracted from the relevant source. So if you're using a centralized exchange account, make sure that you're exporting the full history CSV files or Excel files, including all the deposits, withdrawals, transfers, buys and sells, and so on. It's very, very important that this is done in case the exchange, for whatever reason, goes under, you lose access to the account. Although using API is preferred, in some instances it's not, but most of the time it is, where you've got the live feed from the crypto blockchain transactions into the software. Having the raw data there as a backup is absolutely mandatory. Also, keeping a logbook of the centralized exchange accounts and wallets being used in your business is a very simple, zero cost and effective way of ensuring that your blockchain transactions can be easily accounted for on a periodic basis. This will ensure that no wallet or exchange account is being missed when bringing these your transactions to account, which unfortunately does happen quite often, where we might have to make amendments to prior lodgements or bring those changes to account in the current financial year. It is also important to consider the correct structuring of your wallets, which will aid in optimizing the correct tax treatment for your business's crypto transactions and will aid in record keeping requirements. So this is mainly due to, we'll touch on this when we get to GST, but it has a lot of benefits especially where you have multiple service offerings within your business, to ensure that if there are different GST implications or tax implications with transactions, that those are streamlined or those are allocated to one wallet and are grouped accordingly. Otherwise, I mean, going through those transactions can easily take up a lot of time. And the goal here is to reduce compliance complexity and costs. So yeah, like I said, it'll aid in the allocation of transactions in your business's financial accounts. And it's also important for accurate financial reporting. All right. So if your business receives payment in crypto, it is important to consider mapping out your goods and services to consider the correct GST treatment. Identifying the respective tax implications as well to ensure payment received in crypto are brought to account correctly. Part of this solution involves correctly structuring the wallets, and that can be done for, like I said, different service offerings, goods being offered to the market, but also for domestic and foreign customers and related transactions. That can definitely help. I mean, first off, the biggest issue there is identifying on the blockchain whether or not a transaction is being made from internationally or not. But if we can achieve that, it will help reduce the complexity in determining the relevant GST implications on those transactions, and will save time, compliance costs when bringing that all to account. It's also important to consider other tax implications arising due to receiving payment in crypto. This can include bringing to account the cryptocurrency asset, being the coin or token itself, or if used in the business's core activities, then recognizing it as trading stock at the end of the respective financial year. Also consider where your customers are engaging you for your goods or services. If you are operating within the Web3 space, like I mentioned, this may be a difficult task. However, it's important to know your customer to ensure that the correct GST treatment is applied. And that's mainly due to domestic and foreign transaction dealings. And I understand that can be very, very complex. So having a chat with your accountant to see whether or not it's possible and strategies there is going to be probably the best option. So the reason being there is that GST will be reported on sales if made to domestic customers, and obviously the business is registered for GST. However, sales to foreign customers are treated as GST-free, where no GST will be payable on the business's BAS as a result of those transactions. Our experience with businesses in this space is that it's a paramount strategy to come up with, and can certainly reduce the GST positions of the business on a periodic basis, in particularly where there should not be any GST payable, because if you're unable to show or prove that in a reasonable way that a sale is being made to a foreign customer, GST needs to be remitted. So saving 10% on those transactions can be quite a big consideration. So GST, first off, is consider whether or not you're required to register for GST. The business is required to register for GST. So the main aspect here, the consideration, is if the business's gross turnover is over $75,000 or more, is or more, then your business will be required to register for GST. And when determining your business's turnover for this purpose, you do not include sales that are input taxed. So these are sales that GST is not charged on, and you can't claim GST on any related expenses. So for context, you will include sales proceeds or gain sales from goods or services being offered to the market, and you will exclude proceeds or gains as a result of selling crypto altogether from that. So making that calculation, if it may be relatively complex depending on the business's affairs and how it transacts. And so getting advice on that may be an important consideration for your business. So if your business is registered for GST, you will obviously be required to lodge a business activity statement or a BAS at the end of each period. And for most businesses, that period is going to be at the end of the quarter. If you have crypto in your business and you are registered for GST, it's important to determine what goods and services your business offers and how payment is accepted and how the business makes payment. So if you offer your customers or clientele the option to pay the business in crypto, you will need to determine the GST being charged on your invoices, as this will contribute towards the net GST position at the end of each period. Remember, GST will always be denominated in AUD, so we don't care about the price of, whatever crypto. It's just denominated in AUD at that particular moment in time that the transaction took place. If the business uses crypto to pay for goods and services, the method of payment and GST treatment is no different if the business was to use fiat currency or crypto to make payment. So if the payment being made attracts GST, then a full GST credit equal to the GST paid will be entitled to the business. This GST credit and any other credits paid for in a similar fashion will be included in the net GST calculation in the respective BAS. Important to note that NFTs, on the other hand, are not treated as digital currency for GST purposes, and therefore will likely attract GST. So this is an important distinction to make, because according to the income tax, they are the same. NFTs and cryptocurrency coins and tokens are treated the same, but for GST, they are considered different. Therefore, it's important that if your business creates and sells NFTs, there will likely be GST implications. In particular, if you're creating and selling NFTs, the NFT sale will likely be a GST supply to sales made to Australian buyers. On the other hand, there will be a GST-free supply on sales made to overseas buyers. Again, highlighting the importance of knowing your customers, knowing your clientele, to ensure that the correct GST is being applied. If you are unable to do it, the likely outcome, if you are unable to make that distinction, then the likely outcome will be remitting GST on every single sale transaction, irrespective of where the actual customer or buyer is situated. It is important to consider GST in this situation, and it may also impact your pricing decisions as well. So for example, if you are registered for GST and required to remit GST to be paid to the ATO, typically good practice to ensure that the pricings are set with that in mind. So typically you'll have your price plus the GST on top, so it doesn't come out of the bottom line. So consider if you were to create and sell a collection of NFTs worth $1 million. The GST on this will be, so that's the gross amount. The GST on this will be approximately 91,000. And then the actual turnover for tax purposes will be approximately 910,000. Right. So if, however, you add the 10% on top, the total sales for the NFT will be $1,100,000, less the GST of $100,000, leaving the business with a turnover of $1 million. So pricing this correctly is paramount to ensure that it just doesn't come off the net profit of the business, which we have seen happen, unfortunately. Okay, so CGT, capital gains tax. This is very commonly mistaken as a separately assessed tax. CGT actually just governs the tax implications for capital assets. However, a resulting capital gain will be added towards the entity's taxable income and assessed according to the appropriate income tax for that entity. So, for example, an individual with a net capital gain will pay tax at the individual's respective marginal tax rate, whereas a company's net capital gain will be paid at the company's respective corporate tax rate. So, if you have received or have acquired crypto in your business, the nature of how the crypto is being used is important to determine whether it is a capital asset or if it's trading stock. So businesses that use crypto just to facilitate payment for goods or services being offered or used and nothing else may also be considered trading stock. Therefore, it's important to discuss with your accountant how crypto is being held and why. If the crypto is held as an investment, though, it is likely going to be treated as a capital asset. This can include where crypto has been received as method of payment for the business's goods or services being offered, but instead of selling it to fiat, the business decides to hold it as an investment. So it's quite easy here to blur the lines, and it's not very clear from the ATO exactly what constitutes what, but it's important in that regard to discuss the intentions of the business holding crypto and map out a solution with your accountant to ensure that it's brought to account correctly. And if there's ambiguities with how it's being used, or there may be some gray areas, then it may be worth reaching out to the ATO's early engagement team, applying for a private binding ruling with regards to how your particular situation holding crypto should be treated for tax purposes, because it is quite easy to blur the lines here, especially where businesses choose to hold on to some of the crypto as an investment. You might dispose the rest on receipt as opposed to just holding it for long term. But what is held or left over is held for long term, because if you're receiving crypto as payment for the services of the business or the goods being offered by the business, you'd want to get that back to fiat as soon as possible to cover all your fiat currency transactions. Paying wages, if wages are paid in that manner, payment to contractors and so forth. Suppliers may not accept payment in crypto, so getting it back to fiat is typically pretty important to ensure the business can operate. So clearly structuring the transaction and also your intention will aid to apply the correct tax treatment in accordance to the ATO's current guidance. But like I said, I have full appreciation for situations that don't fit within those two black and white sort of categories. So having a gray area there and discussing the appropriate treatment there may be required. Furthermore, with capital gains on your crypto, you'll make a capital gain if the capital proceeds exceed the cost base of the asset, and you'll make a capital loss if the capital proceeds are less than the cost base of the asset. Also as well, the CGT 50% discount may be available to eligible individuals if the asset's held for more than 12 months or more. They are eligible entities, so companies are essentially excluded from this. So that may be a relevant consideration for structuring options when going through how the business conducts or holds crypto and in what kind of fashion. Right, so trading stock. If crypto in your business is being held as stock for trading, or mining, selling NFTs, it will likely be treated as trading stock, and the trading stock provisions will apply in this situation. And it's important to consider your business activities to ensure that it is correctly accounted for in your accounts for tax purposes. There is a significant difference with how trading stock or trading stock crypto or crypto on investment account as a capital asset are recognized, and also how they're treated for tax purposes. So the results can vary greatly the outcomes can vary greatly as well, which may be a shock. In particular, if you are bringing this to account yourself. So if your crypto is treated as trading stock, it's important to note that it's treated on revenue account and not capital. So therefore, we don't bring to account the difference between what the crypto was sold for and what it was acquired for, being the net gain or loss, right? It's not treated in that particular way. So on revenue account, instead, the sale of stock is treated as a sale. So the market value of the sale of the crypto being disposed of. And also bring into account any purchases is done so at the market value that the crypto asset was acquired. Also, if you pay for goods or services or pay contractors with your crypto, it's important to note that this will also be treated as a disposal of stock and therefore recognized as sales, because instead of selling it to fiat, you're selling it in exchange for other goods and services. That gets recognized as a sale. Not recognizing that in the accounts in the first instance, it can be very messy. So getting that right from the beginning is very important to ensure that you don't have an overly unnecessary complex compliance situation, which will obviously reduce time and costs in collating and preparing your year-end compliance for the business. So it's important to map those things out and make sure that they get recognized properly, or you have a plan of how to map those transactions correctly into your accounting software. Under the trading stock provisions, you'll also be required to bring to account at the end of the year the market value or cost of the trading stock, which will be included as assessable income. Opening stock each year is basically just the closing stock from the year prior and will be recognized as a deduction. It's important to note here as well, this is something obviously for your accountant, but it's important to note that you do have the option to use either the market value or cost. So typically best practice is to use the lower of, in particular where with consideration for closing stock being recognized as towards your assessable income. Some examples of this in particular would be trading, mining, exchanges, NFTs are probably amongst the most common. All right, so that concludes the content delivery for today's presentation. Let's have a look and see if we have any questions. Feel free to put any other questions you guys have in the chat box, and I'll happy to use this time to address whatever matters you guys would like to discuss. Got here, any recommended service for selling products and service in crypto and receiving payment in fiat? Yeah, there's a few. They actually escaped my mind. I'll take that one on notice. If you'd like us to send us an email, I'll double check which are the most popular options. I know there are a few. I think, however, the fees are just slightly more expensive for that additional processing, which is fair enough, it makes sense. That additional transaction fee incurred in relation to using a payment service provider that will accept payment in crypto and convert it to fiat may be substantially less than the additional compliance cost of just holding crypto in the first place. There's also a large degree of risk as well when considering holding crypto in that regard, which is obviously accepted by the business owners, but that is, if you're selling goods or services and you receive $1,000, that $1,000, if you hold the crypto still, may go up or down. All right. Hopefully everyone's having a lovely day. Tomorrow's Friday, so weekend is near us. Hopefully everyone has fantastic plans to relax. Feel free to reach out to us as well on our website. You can send us an email, drop us a line with the number there. If you'd like to discuss your affairs in confidence, then please feel free to do so. Thanks for all attending. Have a lovely day. Take care.